Thank you very much once again to our panelists and of course to Louise for that very informational session. I can tell by your questions that that really landed. It was very valuable in terms of how it affects you today, what you can apply, and I hope that it actually kind of positioned what we've discussed throughout the day for you. I know it started off a little bit murky, became a little bit clearer, and I think we are smooth sailing right now. And our next speaker is going to talk to us about some practical tools to support CFOs and treasurers. And I'd like to read out his bio, please, because he actually is a replacement speaker from Kariba. So I'd like to read out his bio because it won't be in the program. John Vincent is a fintech professional with over 18 years industry experience across corporate treasury and banking software in Middle East, Africa, and Central and Eastern Europe. He has rich domain knowledge of corporate treasury, core banking payments, risk management, cash management, supply chain finance, digital banking, retail and corporate lending, AML, CRM, and regulatory reporting. He has worked closely with corporates across different industry verticals as a treasury advisor and brings deep insight into the challenges faced by corporates in the areas of liquidity and risk management. Over the years, he has worked across multiple functions, performing key roles around pre-sales, solution architecting, business analysis, and consulting. I trust you'll also have a lot of questions for John to tap into his vast knowledge as we bring together the themes we've discussed this morning. But without any further ado, a round of applause, please, for Mr. John Vincent from Kariba.
So how are we doing today? And very interesting sessions. I think the panel was highly active, energetic. You had a wonderful set of questions. So I'm now wondering what kind of questions will I get? So while this comes up, so we had a round of introductions. I will just say that I'm more into technology. I am a fintech professional, but I see banking practices, corporate treasury practices, mainly from the side of technology. So today the attempt here is to actually look at how corporate treasurers and finance leaders who are sitting among us and the bankers look at the situation around what is happening in corporate treasury. So the theme that we have today, I mean, as you see here, is sailing through troubled times. We are looking at how we are navigating through these challenging moments, and that's the focus area today, right? So the agenda that we are going to focus on is the volatility aspect, right? So all of us know about volatility in the markets, but do we have a holistic picture? When we say economic volatility, what do we actually mean by that, right? So we'll see that. We will look at the dimensions of economic volatility. We'll touch upon how it impacts treasury teams globally, locally as well, and then we'll move on to what is the need, right? That need is the need for adoption, right? Digitization in treasury, we'll see that, and what are the best practices around that. And then we will move into the technology considerations, right? We will also touch upon the latest in terms of technology, APIs. We have talked a lot about it, but that's the attempt here, right? And we will also have Q&A at the end. So please stop me wherever you have any questions. Right, I think this is a good start to understand where we are facing challenges. Because when we're looking at volatility, it is not in one single area, right? When we talk about geopolitical crisis, we're talking about changes that's happening really in the UK. You've got the stock markets behaving very oddly. To political considerations, right? You have the runs on currencies, right? You see the weakness in certain currencies. This is all geopolitical crisis plus the sentiments that are playing here, right? So you see that the local markets, obviously the most pertinent question is, have we touched the bottom when it comes to the depreciation on the rand? right? So these are things that are very important from a volatility perspective. So the currency markets are impacted directly. We also see an impact on interest rates, right? And to couple that with inflation, we are actually surrounded by a lot of factors here which impact treasury. And this is where we are going to focus today. We have all the news items here. You can actually go through them. But these are things that will keep changing. You have currency disruptions. You have volatilities in the commodity prices. So all of them actually lead to volatility. And that's where we will see how we are going to tackle that. And that's interesting to see. So just understanding where are we in terms of the volatility, especially on the overall supply chain, right? The markets are made of buyers, sellers, but the supply chain to be intact means the production lines need to be, having no disruptions. Suppliers have to be having the access to raw materials, and buyers need to have the finished goods on time, right? But any disruptions there is actually going to be disruptive for the whole ecosystem. So that's very important, supply chain. We talk about inflationary impacts. How does inflation actually, make things very difficult for treasury teams today, right? I'm actually procuring, software. A depreciation on the local currency makes it more difficult for me to afford the license cost, right? So these are important things. So do I actually now go and procure a new ERP, or do I put that project on hold? So these are important things that we need to understand. Looking at interest rates, the borrowing costs are going up. This is good news for certain category of banks. Some financial institutions benefit from this, but overall, if there are no takers, then you are actually having a decline. You're not growing your business. So, inflation, interest rate hikes, all of these are characteristics that we normally come across. And then the currency volatility, right? Now you see how the euro and the USD played out. There was a time when American tourists always used to complain while traveling to Europe. They're coming to Paris and things are very expensive. But because of the changes that we experienced recently, they never had it so good. The American guy comes in and he does the most expensive shopping in France and he walks away happy. Why? Because currency volatility has been there in the markets. So it depends on which side of the coin you're looking for. If you are an exporter, and you are actually looking at a currency devaluation, you are very happy. But if you are an importer, that's a different effect altogether. So you can actually see the impacts that are there here. I mean, right from a macro level where economic growth has slowed down, the fastest economies in the world have now started going below 6%, 5%, right? So that era that we were looking before, we are looking at, growth that was in excess of 8.5%, 9.5%, has actually petered down a bit, right? So this is the impact. The PE ratio that we talk about, that's again taking a hit, right? So corporate earnings are also getting impacted, right? So these are definite challenges for the corporates because I need to answer to my shareholders, right, my board. That's again very important. Stock markets, we have seen recently what stock markets can do. They can be having a run on your prices, and really speaking, it can wipe out a lot of your gains that you've historically made. From a balance perspective, obviously liquidity for corporates gets impacted, so the cash balance is really, cash is king, as they always say. It's very important consideration. Also from an individual perspective, I mean, you're looking at your mortgage costs going up as a result of interest rate hikes. You're looking at a run on cryptocurrencies. I mean, this is a real big impact. And what is the time frame for a recovery? Are we really sure when are these cryptocurrency players going to come back? And that's again, some of the challenges that we see, not directly but indirectly. And then supply chain, we've already talked about that, right? So these are important things that we need to consider while we see the impact of volatility globally, right? So from an interest rate perspective, obviously we heard interest rates actually being a challenge, not only for the borrowers, but also sometimes the bankers, because the bankers are also looking for opportunities to ensure that their assets are not underutilized, right? So they need to also be cautious of this, and then the impact on the inefficiencies that is brought in, let's say supply chain financing. A lot of us actually are relying on banks to extend credit. So in this kind of a challenging scenario, if the interest rates are very high, you are actually choking the supply chain. The suppliers who are looking in for credit, the small and medium size industries, they are looking for credit. So in interest rate hikes really impacts their liquidity because they are not able to get funds to manage their supply chains at a reasonable price or an affordable rate. So that's the direct impact of interest rate hikes. We're looking at working capital programs. We have now realized that banks actually benefit a lot by engaging with not only the buyers, but their ecosystem of suppliers. How does this happen? Obviously, you know very well, when a single corporate comes in and he brings on board the entire ecosystem of suppliers, it is additional business volumes, right? So they need financing. So how competitive are you today? That determines the fate of your supply chain financing programs. And we know globally how successful supply chain programs are, especially around buyers who have got a lot of anchor suppliers. So again, an impact there can impact your supply chain finance programs. This is mainly for banks, but large corporates also can drive supply chain finance, right? So that's something we can see in more detail. And then we are looking at what are the remedies that we can look at here. In terms of the treasury solution itself, what is my possibility to see different scenarios? Do I have a best case scenario where I'm saying that if my accounts receivable is going up by 5% versus 10%, what is the additional cash flows that I'm going to get in the next 6 months to up to a year? So these are important things. So the ability of the system to give you that ability to have the different scenarios and to make sensitivity analysis is very important. Again, using your idle cash, how well are you deploying your idle cash today, right? Or are you using it effectively to pay down debt? So these are considerations that you need to make when you're managing your cash. Again, overall performance, did I actually gain, from the cash that I've actually put in place? Did I actually invest in short term, or I'm looking for long-term benefits by going into the stocks? And then obviously, how expensive are my borrowing products? Do I go for funded or non-funded products, right? Do I actually try and look for liquidity within the group? So I have liquidity to ensure that I don't go and borrow further, right? So these are important considerations when it comes to interest rates and how it impacts corporates today. Coming back to currency, right? I mean, we know how expensive it can be if you're on the other side, which is if you are a buyer, and you are a functional currency which is really depreciated, can impact your balance sheet, right? So having that interest rate combined with currency volatility, I mean, this is the tailwinds we're talking about. It can really dent your profit margins, right? So this is something that we know already. Hedging costs go up, right? So effectively, this is a term that we always talk about. Treasurers are not having visibility to plan ahead. So what is the solution here? Am I hedging on a reactive basis, or do I really have the ability to get those exposures early enough to hedge effectively? Why effective? Because your transaction cost on hedging goes down. So that's again very important consideration. How effective are you on your hedging? And then what does a modern FX program mean? When especially looking at the context of exposures, if I have the visibility into my exposures early enough, what I can do is I can plan a natural hedge against certain currency pairs, right? So this is something that is known, very well known fact, but it's being adopted more rapidly these days, right? And the other aspect around, do I actually reduce the number of FX transactions? Can I do netting? So the netting can actually reduce the transaction volumes. So as a net result, you will end up paying less transaction costs. Overall, the hedging costs will go down, right? So these are things that we need to remember about currency volatility. And we'll see from a treasury perspective, these are the important points that we need to keep in mind, right? So we talk about rising interest rates. That is also an opportunity in some ways, right? Because I might want to deploy them in high interest returns. In terms of my deposits, I can actually use that. I can look at reducing my external borrowing, but actually utilize my internal funds within the group. And then, overall liquidity can come in by effectively reducing expenses, making your AP teams more proactive, extending DPOs. We all know that. But these are things that need to be proactively done. Currency volatility, we talked a bit. What is the impact? You have missed revenue opportunities. We know that this can impact earnings. So overall, the cost of hedging needs to be controlled. This is something that we talked about already. And coming to supply chains, right? So the supply chain disruptions are those that need to be looked at. We need to ensure that there's a healthy ecosystem of buyers and suppliers. The suppliers should be getting paid on time. If they're not paying on time, then the reliability of their orders is again compromised, right? So that's again very important. And planning the liquidity, again, in different scenario. What is my best case scenario? What is my worst case scenario? That's something that corporates need to be aware of. And then from an inflationary impact, we have seen, we are looking at treasury teams who have got certain sets of teams who are having that experience to take those decisions. So it's very important that in this kind of a scenario, you are having a dependency on certain set of people who have the right skills, and also broad basing that across the group, right? So that's again some of the important things that we need to understand how it impacts the corporate treasurers today, right? Now, so we talked a lot about the prevalent crisis, but again, from a digitization point of view, so some of the important challenges that treasurers face can actually lead to this particular question that you're seeing right now. How can I digitize treasury processes, right? How can I become more efficient? Can I actually ensure that I have what I need to look at the advances in technology? We talk about APIs, but if you really break it down, I need to look at the monitoring aspect. We talked about the visibility. The treasury teams always look at visibility. How do I get visibility on a daily basis? Do I know what is my cash balance in the morning, intraday? Has that been impacted by some intraday transactions? Today we don't have that, right? And that is where technology plays a role. If you're still working in an Excel environment, we are still waiting for the bank statement to come. Somebody from your team is actually logging into a bank portal, downloading the statements, and then coming out with the information that the CFO is looking for. So we have actually lost time. And that's really, time is money, as we all know. So this is important. Market volatility, we talked about in great detail. Whether it's the FX or the interest rate, we need to look at managing this volatility, right? So again, all of these, are the important considerations. So when I say treasury optimization, these are my goals. How do I actually look at the payments today? Can I bring in more efficiencies in my payments? So the answer to all of that is an efficient treasury management system, right? So can I actually plan to get a treasury management solution that will help me solve these challenges? Again, we are looking at the automation to play an important role. Now, automation doesn't mean that we only say APIs. We are also looking at the treasury landscape as a whole, whether I'm looking at planning and budgeting solution, integrating my payroll, my surround systems. I need to focus on all of them. And then these are the important considerations when it says, if you are looking at extending the existing ERP, there is a possibility you might be able to do that. Nothing is impossible. You want to customize your existing platform, you can do that. But it costs man hours. It does not mean that you will get your results immediately, but are you willing to wait that long, right? So this is one important thing about extending the functionality out of your existing platform. Then we are looking at the new age technologies. We talk about AI, the RPA process. Is it effective? The answer is yes. Can it be bringing down the costs? Yes. But is it a safe practice? Is it something that the regulators are okay with? Is something that you need to consider. So there are technologies that are available, but again, do you want to adopt that? So that's an important question, especially if you're a multinational which has got a presence not only in South Africa, you're looking at presence in North America, Europe, you have regulatory considerations, right? So that's important. And then finally looking at which are those treasury management solutions that are available in the market who offer you best in class, as well as meet your local requirements. So really speaking, I mean, if you really look at this, when I'm looking at my treasury journey, I need to evaluate if I am looking at a treasury management solution, where does the maturity lie today, right? So I can look at the real foundational level where I'm actually happy to work within the existing paradigm, right? I'm having a Oracle, EBS. I may have a Sage. They are commonly used ERPs. Can I use them effectively to meet my treasury? Yes, you can. But that's the level that we're talking about. You're not differentiating here. And mostly, today you see 40 to 50% of the corporates managing their treasury innovations in this particular way. But if you go higher up, you're starting to get into that slightly strategic level where we are now looking at the core areas, adopting industry practices. Should I go on Swift? Because Swift GPI has come now, right? I need to have the latest in Swift GPI. So that means global payment innovation. I'm able to have the full visibility on the payment lifecycle. Not only from the point the payment was released, and the payment bank receives that payment and then makes a decision, accept or reject, but the journey till the point it reaches your beneficiary, even including the journey via the correspondent bank. So that's Swift GPI. But do I have that kind of cross-border payments? I'm only making payments in South Africa. Do I need Swift GPI? Do I have enough volume? Should I invest in a solution that's Swift GPI compliant? So these are things that we really need to consider. Right? At the end of the day, every corporate has its own unique set of requirements. It differs in industry verticals. And then the strategic part are those outliers, and though really are looking at a very competitive market. It's a difference between what a treasury management solution can provide, and that's where things like real time comes in. The best practices comes in. You're looking at a huge conglomerate which is spread across geographies, large number of payment banks. Large number of banks to report. They have got investments to manage. They have got facilities not only in the local JIBAR, but they have got LIBOR. They have to worry about LIBOR transition. So these are things that really are required to be looked at when it comes to the tier 1 solution, right? So that's the way you should look at your TMS, right? In terms of evaluating which solution will fill in those requirements, right? So that's where you are actually moving in from a highly strategic to a highly competitive bandwidth, right? So this is one important area. From a corporate perspective, when you break it down into the functions, from a cash management function, we talk about visibility all the time. So real-time visibility is the need of the hour. Corporates are increasingly looking at solutions with banks. They're looking at technology to fill in this gap. APIs provide in that gap. So ultimately, I adopt an API, but will it help me with every bank? Not really. Can there be a universal API? We are all dreaming of that. But on the ground, you really have to understand to what extent can you use this technology. But API integration is something that we are quickly moving towards. Second aspect around what do I do with the visibility? Visibility should translate into effective deployment of that idle cash, right? So I see the visibility, I should be able to click, and I should be able to allocate. And this is something that I've seen in certain platforms. I have BlackRock. I have made investments into BlackRock, but I want to actually allocate in real time. I don't want to wait till the end of the day and then I take a decision that, now this is the best time to make that investment. I should be able to do the real-time investment. So that's what we're talking about, bringing in technology to ensure that we optimize the idle cash. Liquidity, coming in from a supply chain perspective, how am I actually getting that liquidity out of my supply chain? From the ability to, get the suppliers to, get paid early in return for a return on investment, that's one consideration. The second one is using funds within the group, in-house banking. I set up an in-house bank. I have borrowing and lending within the in-house bank, right? So this is very important. I'm able to save on transaction cost. I don't need to go to the banks and ask for financing. And this is overall liquidity planning. I'm actually managing my funding. I'm able to reduce my interest outflow and obviously the other transaction fees. And this is again very important aspect of overall liquidity. FX, we talked about bringing in early detection of exposures, so that the ability to hedging in good time, earlier than when you normally do, from a reactive approach to a proactive approach. That's what we are saying here. So hedging, it becomes very important, and for that, exposure management has to be in place. Today, you need to have the ability to get the exposures from your ERP. much earlier than what you normally anticipate. So this is key here. Technology can help you here. And then the overall impact of bringing in the transaction cost, reducing in the net exposures. Again, by netting off certain currency pairs that you're normally dealing with. Payments, again, we have talked about having the benefits of payments in real time. There's no exceptions to that. Obviously, we need to be aware of what are our priorities in terms of do I have cross-border payments in multiple currencies? If I'm doing that, which are those banks which give me the best benefit? Should I, rather than working with 10 banks, reduce the number of banks to say 3 because they give me preferential rates? That should be the way I should look at my payments when I look at cross-border payments in multiple currencies. So this is on the payment side, technology being a major contributor to reducing the transaction cost. One simple example could be, can I use efficient ways of transporting that payment file? Instead of doing an MT101, there's a file format that's being used. You can have an ACH file, you can have XML pane of a different bank standard. But is it really helping me to bundle those payments and efficiently make those payments, right? So reducing the transaction cost by adoption of better payment file formats, right? So, and then the last piece, obviously, we talk less about these, but we still need to maintain, some investments today are in cryptocurrencies, right? But again, corporates are highly, careful now. I mean, they are in the recent developments, they are keeping away from cryptocurrencies. So again, it's a payment solution. Yes, you can actually make payments using cryptocurrencies. Certain countries are opened up, but again, something that corporates are not still comfortable with. But there are some who still are looking at this avenue. So overall, this is what needs to be seen as key considerations when it comes to managing a treasury management solution, right? So now to look at the actual trends, what have we found out? We talked a lot about API. I think in the 2 discussions that we saw the panel discussion going towards API. We had somebody in the morning, we talked about APIs here. So you can see here, the importance of API is not felt here. And at the same time, you have statistics coming in. You can see that, a lot of finance leaders are prioritizing APIs for this particular year, right? The surveys are coming in from IDC, from Gartner. You can see the CFOs also prioritizing emerging technologies. You're seeing that, there is a real-time data requirement. Why? Because insights are what the board requires the CFO to actually provide. The CIOs, they need to have key insights. And that's what is driving the need for APIs, right? The CEOs and the boards are actually in need of real-time intelligence. So having said that, what do we as a technology company look at? I mean, I've not taken every aspect of treasury, but this is something that every treasurer is looking for. Data-driven forecasting, right? Because we talk about AI, right? Can I have a use case for having forecasting driven by AI? And that's what you see here, right? Whether we are talking about payments, financial transactions, my forecast should be 360 degrees, right? I should have that complete visibility. I have financial transactions. I'm borrowing today. I'm going to hedge tomorrow. I have a payable coming up. I need to plan for all of that, right? So that's again the cash flows that needs to come from multiple sources. Today I need to not only bother of my AP and AR as part of my operational forecast, I need to look at the entire set of financial transactions, right? So that's where all of these are important sources of those cash flows. And there should be the solution which is capable of taking data from all these sources. So the centralization of data, very important. How can I do that? I can use APIs. This is one of the important things that we are talking about here, data-driven, right? And then how do I actually use that data effectively? Do I actually have modeling? Can I use regression analysis? Can I do scenario analysis? We talked about best case scenario, worst case scenario. All these are part of effective cash forecasting, right? So this is what treasury teams are looking for. And then do I have variance? Can I have variance analysis against different sets of data? How did my budget go, against my actuals? How did 2 budgets of 2 different financial years look like? There was a variance. So what is tying that together is the reporting layer. So API on one hand to drive data from multiple sources, but BI to bring in that actionable intelligence, right? So that's what we are talking about. You will see that APIs are going to unify data from different sources. You're also seeing how BI will consolidate this data and present that, using dimensions and measures with customizable dashboards, right? So this is what we are looking for in terms of technology playing an important role, right? So this is just one of the use cases. Obviously, we have payments. We had a discussion with the panel. We talked about operational risk, fraud detection. Can I talk about the adoption of emerging technologies, machine learning? Can I read, from past data? I've been paying a supplier. For the last 2 years, the payments have been in the bandwidth of $50,000 to $70,000. But suddenly, somebody joins my AP team, and he is making a payment of $100,000. In the normal scenario, the system doesn't know. But if there is machine learning embedded into your payment solution, that payment will be flagged off. It will not leave your payment solution, right? So that's the kind of technology we are talking. So there's a talk about disruptive technologies. Yes, there is space for that. There is space for emerging technologies. So we need to have this. And needless to say, I would just summarize this by saying here that, treasury teams actually need data, and that needs to be actionable, right? And this should lead to more visibility, and that's the action orientation we are coming to here, right? So you see real time, that's a key word everywhere. We are talking about risk mitigation, whether it's market risk, whether this is operational risk. We are looking at enhancing the user experience using customizable dashboards, nice user experience using the UI, and then, having that actionable intelligence coming from the BI solutions, right? So this is what we are talking about in terms of holistic adoption of technology to drive, innovation and, a better treasury management at any given point in time, right? So that's it from my side. If there are any questions, more than happy.
Thank you very much for that presentation. I think I wanted you to perhaps link how APIs fit in with the digital transformation, because we've heard a lot, throughout the day, and I think we're kind of getting there, but we just want to, perhaps if you could explain where it fits in the bigger picture.
Let me break down that API here from a corporate treasury perspective. So first category of API that we talk about is the bank APIs, right? So when we talk about bank APIs, connectivity with the bank is in real time, not only for cash management. Cash management would mean, do I see my balances moving every second, every minute? So that's number one, cash management driven by APIs. So that's the first aspect of the bank API we talk about. But that's not just one way. It's a two-way connectivity we're talking about. So not only the incoming data from the banks in real time, but also the execution of payments. That's the outgoing side. Now, typically an API orchestration happens from a payment hub or a payment solution. It can actually happen from an ERP. It can happen from a treasury management solution. Either ways, the communication between the platform and the bank has to be in real time. So that's one category of APIs which we call as the bank API. The second set of APIs is the API that you have with the ERP solution, right? Can I connect with the ERP in real time, right? So the Oracles, the SAPs, the Microsoft Dynamics of the world, they are also having dedicated APIs. So the consideration when you're looking at a treasury solution is, how does a solution communicate with the surrounding applications? Whether it is the banks, whether it is the back-end solutions, mainly the ERPs. So that's what we need to look at.
And I've been very sympathetic and taken a very sympathetic stance with the treasurers in the room, because with increasing technology, it's looking more and more like banking and financial management is more computer science. And you mentioned cryptocurrencies, for instance. And, we heard from Mornay that in 5 to 10 years' time, we expect more of the industry to have adopted APIs and banking hubs, essentially. But some people would argue that in 10 years' time, we'll be on blockchain. So what kind of tools are coming out and emerging to actually help corporate treasurers, financial managers, traditional finance professionals to better manage and deal with all this transformation?
Yeah, I think we can take some use cases here. I mean, definitely, as a solution provider, every solution provider is looking at disruptive technologies. We talked a lot about APIs, but we also have